Welcome to Montana Whiskey, Wealth, and Freedom.
Well, I've been in love, I've been on the ground, I've gotten back on my feet, just to fall back down on my knees for you and your whiskey under the bridge.
Why don't you introduce yourself? Tell us who you are.
Yes, I'm Kellyanne Hoven. I am a realtor and certified real estate negotiator. I work with Coldwell Banker Markovich Real Estate based in Butte. I am a mom and a licensed foster mom. We talked a little bit about that. Yeah, that's me.
Very cool.
Yes.
How long have you been in the business?
A little over 5 years.
Excellent.
It's been very interesting.
What is a certified licensed real estate negotiator?
A certified real estate negotiator means I paid money and took a class, essentially. But if you're familiar at all with the book, Never Split the Difference, it's very similar to that. Essentially, I've had additional training and passed the test in real estate negotiation. And the emphasis in both that book and this course was listening, really getting an understanding of what the key thing is for the other party.
Meaning that, okay, so if you have, because you have a buying side and a selling side.
Right.
So the key is to understand how to hear both the interests or needs of both sides and know how to be more effective at bringing those parties together through better communication.
Exactly. So it's rare that I represent both a buyer and seller in the same transaction. But negotiation is always a big part of what we do, especially with residential. And so this way I can both not necessarily negotiate with my clients, but really understand what their main concerns are, and then be able to illustrate that well and cooperate and communicate well with the other agent to sort of get those needs across so we can get those needs met. And then same thing on the other side, listening to what their biggest concern is and seeing how we can work something out that works well for everyone.
That's great.
Ideally.
Right.
Yeah.
Can I put, I don't know if you'll feel comfortable with this question, but I'm going to put you on the spot a little
Sure.
bit. With that said, what would you say is your biggest, and I'm thinking about when Karen got into the mortgage industry, she had some issues with the industry itself, and she didn't feel like that people really were doing the best jobs of representing the client and the applicant. And so it kind of
In the lending world.
in the lending world,
Right.
correct.
Sure.
Yeah. And she was able to make some changes that made it more palatable for her to find a path in the industry that she felt like she had more of a fit in. So from your end of things on the realtor real estate end, what would you say is the thing that drives you the most bonkers about your industry as far as your peers go, and how do you think that what this certification has done for you as far as kind of giving you that path of your own to differentiate yourself?
Sure. Yeah. I obviously there's touch points along a transaction where there is opportunity for conflict, because I'm representing one party usually, and my role, my duty, my ethical responsibility is to represent them and their needs, and that often doesn't consider the wants and needs of the other party, the party on the other side. So it's perfectly legal to do what we call dual agency, where you represent both the buyer and the seller at the same time in the transaction. For me, it's an ethically gray area. How can I, as the listing agent, get the most, because that's what a lot of sellers want, right, is the most money for their house. Not all of them, but most of them. How can I get them the most money for their house if I'm also trying to represent a buyer whose main concern is getting not only a fair deal, but a good deal, and their sort of worries met, if that makes sense? To me, that's a mismatch. So unless I know both parties well, or it's land or something where there's not a lot of opportunity for negotiation, I feel comfortable moving forward. But typically I don't, for that reason. How can I do my job
Right.
to the best of my ability and
both of
fulfill
them.
my duty as their agent if I'm playing both sides of the coin?
It's quite the quandary because
Yeah.
you've got somebody in some, it almost sets it up so that somebody's going to be the winner and somebody's going to be the loser.
Yes.
Not to be too
And-
hyperbolic about it, but and then you're
Truly.
right in the middle of that decision
Yes.
process.
So I have a colleague who's been in the industry for decades, and I really appreciate his wisdom. He likes it when both parties sacrifice a little, everybody's hurting a little. I like it the other way, where everybody's happy with a compromise. But I have worked with agents who have straight up told me they don't believe in a win-win situation, which for me is an ideal situation. She feels that she serves her clients best by absolutely going for it and doesn't care about the win-win. She wants to win. And I understand that. And, you know, that's good for her. That's how she does her business. But for me, I have found things tend to go better when you don't force it, when you don't bulldog people around, especially these days. But people are finicky. And, you know, if they start getting worried, you know, they're just going to jump right out of the pool. They're not going to stick around to see if they're going to sink or swim. Like, you've got to kind of tread lightly in some situations to kind of get what you want. And I'm a big believer in life too of, you know, you catch more flies with
Honey?
honey.
Yeah.
So
Like the honey,
Or
like the honey
liqueurs.
moonshine.
yes,
Yeah.
cheers to that. Yes. Honey moonshine.
So that's actually a great segue because I think that you know, one of the things you were talking about, especially this day and age, and I'm kind of wondering if, as far as how what is really going on in the marketplace right now, what has changed? You know, is there truly a tightening in the market? What are you experiencing? What are the things that are driving that sensitivity around the people that you do encounter, maybe differently from what you've experienced
Yeah.
in your early part of your career?
I started in 2020. So
Oh.
it was essentially, I mean, globally, that was the biggest peak of the real estate market ever.
Yeah.
And I sort of equated it, and I'm not trying to downplay anybody's business or role, but it was sort of like fishing in a barrel. If you weren't doing business, you were trying not to. I mean, it was just boom, 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 and things were moving very quickly. And I enjoyed it a lot. I feel like I was able to really just jump in with both feet and really do as many transactions as some agents, it took them a year to do. I was able to do maybe in a quarter, just volume wise.
Right.
So I think I was able to learn by trial by fire. You know, it was like drinking from a firehouse. It was a little exhausting, to be completely honest. And it can really overtake your life, as I'm sure you guys know as small business owners. So it was definitely a fiery beginning. Yeah, just kind of wild, kind of crazy. And then, you know, things really started to shift. Butte and the surrounding areas, and Whitehall's included in that. It's like a geographical area that I track most closely on the MLS for stats and things like that. But we've always kind of had our own market. We've been a little more protected from the big swings that happen more on the national level, or, you know, the 2008 housing crash. We didn't see as much of the repercussions of that as some larger areas did, which is great. And our market was always pretty steady before COVID, right? We had appreciation that was keeping up with inflation, you know, pretty steady, like 3 to 5% growth in appreciation in people's properties. And we saw double-digit jumps during COVID, 20, 21%, which is crazy. And now we're sort of correcting, and really on a national level, things have kind of swung the other way. I think in Butte and the surrounding areas, because of how tight our inventory is, we didn't get this huge correction. You know, our prices and values of properties have stayed essentially the same. They've appreciated some. Have wages kept in line with that? No. And then now insurance and property taxes have increased. So there is a lot going on in the market. It's almost like an undercurrent because there's also not a lot going on in the market. But the industry had huge changes. With some of our paperwork, you know, from a national level, there was this big settlement with the Department of Justice, and that all had to kind of filter down. And those changes had to be implemented on the state and local level. So the industry was undergoing a lot of upheaval, turmoil, if you will.
And lenders had to figure out how to deal with that too.
Oh,
Once
gosh,
that rule
yes.
changed, it was like, okay, and now how are we going to handle this?
Oh, and it honestly,
Yep.
I think we haven't even seen the peak of that in the
No.
lending
Yep.
industry yet, of how that's going to affect people. A lot of it had to do with buyer's agent compensation. And so that gets sticky because as a lender, you know, many buyers have to come to the table these days with a down payment, closing costs, and now, you know, who of them has the cash to pay their agent outright? It doesn't, they were really trying to kind of overhaul the system based on sort of lack of disclosure of what happens with those funds. But here in Montana, we did things the right way anyway.
Right.
So I don't want to say it's been business as usual. It has been a lot more negotiation. Because buyers are pickier and are expecting more. It's no longer a seller's market where you can sell for cash as is the day after you list your home in a bidding war. You know, you're sitting longer on the market. You're getting lower offers. Buyers are asking for concessions. So that basically their closing costs or rate buy down gets almost factored into their loan and their monthly payment. And they're not having to come up with as much cash due at closing. So we see a lot more of that these days is kind of what we're seeing.
How much do you think that the because this all kind of neatly ties back in the whole 4 to 5 year look back to the whole COVID boom, right?
Yes.
So like when the rates were so low that allowed people to sort of lock in that low rate, which now are you sensing that people want to change their living circumstances but almost feel trapped by that low interest rate?
Totally. And I think it's across the board, and it's very apparent in our markets. You know, I'm in my mid 30s. I have lots of friends and peers in similar situations where they've had that additional child. They have more toys, you know, like I'm talking campers and side by sides and things like that, where they truly want and need more space. For practical purposes. I mean, not just like upgrading to something nicer, bigger, fancier. Like truly they need more space for their growing family or what have you. And between home prices staying pretty high and rates going up more than double potentially what they have locked in, plus the increase in property taxes and insurance that affect their monthly payments, plus, you know, they're making around the same amount of money. Cost of living has gone higher. People are so crunched, they just can't make that jump. And I think so many people got tied into almost like that powerful feeling of like, well, I have a sub-3 interest rate, you know, like,
Right.
yay me. Well,
It's almost like a badge of honor.
yes.
Yeah.
And it really shouldn't be.
Yeah.
And, you know, we know historically they've always been higher. It's just seems to be this time buyers and sellers are so much more sensitive to these higher rates than they were in the past.
Well, it's a funny thing for me, from my world, because that, you know, the number one question when somebody calls me is, what's your rate? And, you know,
Yeah.
depending on if they actually know me, then they get what I actually do. But, you know, somebody who found me out of the blue on Google or whatever is going to say, what's your rate? And like basically my response is, well, it depends. What do you want it to be?
Yeah.
Because the simple fact is how we pay that mortgage back, et cetera, all dictates our rate ultimately. And there are so many different ways that, I've talked to people before where they're like, I don't want to give up my mortgage. Okay, well, let's actually look at your numbers, look at what you can do, look at what you might be an option for you, and see if actually you don't end up effectively paying even a lower rate by the time you work things out, with different products like the all-in-one loan or something like that.
Yes.
Now that we look at it, well, gee, you were in a 3% mortgage, but with how you cash flow, with how you happen to live your life, without changing anything you're doing, you're getting into your bigger house and your effective rate is 3% or something like that, 3.5%, or still 3, or maybe even 2.5%, all depending on how they do that. And all of a sudden they go, oh, I'm not stuck in my mortgage,
Yeah. And I'm a big believer also in not living above your means.
Right.
And I'm not trying to, promote people into getting into these homes they can't really afford to be in. But I think people get stuck on sort of the surface level of the rate and don't realize you can do things, even if it's not an all-in-one or a home equity situation, buying down the rate, things
Right.
like that. What's the benefits versus the cost? Like, are your kids fighting every day because they're on top of each other? Are you going to get divorced because nobody has space to decompress or have their needs in their home met? Like, what is the cost versus benefit? And then even if your monthly payments end up being a little higher, is that worth it for you? Like, for the quality of life that might be improved with a move.
Right.
Well, so I guess you open the can of worms on the all-in-one by mentioning it. So, which is great because it's a very relevant possible solution for the right people around this conversation we're having. We've kind of we ran head first into this predicament, so to speak.
Yes.
And now it's like, okay, now here we are. Here's the reality that we're all trying to handle and deal with. Both
We're
on the
paying the price
both on
of
the
those artificially low rates.
yeah,
Yes.
both on the consumer end of things, and also on the professional end of things, where people are trying to figure out, well, what can we do? Like, how do we help people in this current environment, in this current predicament? And so, having mentioned the all-in-one, this is where we have kind of started the conversation already, referring to like sort of the trapped equity problem. I mean, we didn't say it outright, but I think that that's kind of ultimately what it boils down to, is that people don't realize about the opportunity that's locked inside the equity in their home, or what they can do creatively to get positioned into figuring out how to change their circumstances, because they don't want to get the divorce. They don't want their kids.
They can't afford to get divorced.
Yeah, they can't. They can't. So, I love it from the standpoint that innovation is the mother of necessity. No, necessity is the mother of innovation. I'm saying that wrong.
Yeah.
So it's almost like we have to figure out, okay, how do we move forward from where we are based on this condition we've created?
Yeah.
So let's talk a little bit about the all-in-one.
Well, and along those lines of equity, one of the things that I think people lose sight of is, okay, I have this mortgage, but I do have a bunch of equity I've built up over that time that I can put into the new house. So even if I'm buying a more expensive house than I have a much bigger chunk than I probably had when I bought that first house.
Sure.
And I was buying it with 5% down or 10%, whatever that happened to be. Now all of a sudden they've especially if it's somebody who owned the home before and was just refining during the COVID years. Now let's unleash that and see how that's going to work for you too in that new purchase.
Yes.
And so being able to use things in a way, the beauty of the all-in-one is rate's only one part of the equation.
Yes.
It's time and debt, it's the amount you're borrowing, and it's the rate. And the three of those and how they work together, you're going to pay less money on a $100,000 loan at 6% financed over 10 years than a $100,000 loan at 3% over 30 years.
Yes.
And so even those low rate mortgages, those 3% mortgages, when you look at them amortized over 30 years, that's a lot of money in interest. So if you can figure out a way to cash flow better without locking yourself out of your equity, I mean, that's the beauty of of what they did, is just sat back and said, well, let's see, how could we do this in a way that just makes more sense?
Yes. And my understanding, correct me if I'm wrong, is it's much more common in Europe. My family lived in Australia when I was growing up, and that's essentially how all of the mortgages are.
Yep. Yeah, Australia, that is the way. There's a number of other, that's actually the founder of my company, who has the patent on it. He was on a trip to Australia and was blown away by what they did and went, well, gosh, why doesn't everybody do it that way? So they rolled it out and back in 2005, which is kind of our last high rate phase, because people needed the extra thing. So, I mean, that was the whole purpose of it, was it doesn't have to be. And that was the fascinating thing. Whenever you, now it's been there for 20 years. When we look over 20 years of data, what people's effective percentage rates have been versus what their, stated rate would have been on the, if they would have taken 30 years to pay it off, is just amazing what they ended up saving.
Right.
Well, I excuse me, Kelly, and I think that one of the things that you touched on that I think is really relevant as well is that considering the fact that more people cash flow, they move more money through their bank account in 5 years than they do through their
they move more money through their checking account in 5 years than they owe on their mortgage.
Right.
So how do you put it to work?
Right. So this goes back to like the, kind of trying to figure out how to be a little bit more creative in figuring out what is
putting idle dollars to work for you.
Yeah.
That money you might need 3 months from now, 6 months from now, whatever, but right now it's doing nothing because you don't want to lock it up. It gives a way to do that, to actually put it to work.
Yeah, which I think makes a lot more sense. I think people are inherently afraid of things they don't understand. And the all-in-one can be complicated or convoluted if you get really into the nitty-gritty of it. But I think as the basic principle of sort of a mortgage and a home equity line of credit combined into one thing, cash flowing through essentially your checking account, is simpler.
Right.
I mean, that's three things combined into one right there. And I had all those three things: checking account, home equity line of credit, and a mortgage. And so we did refinance into an all-in-one. And so that's one less bank account login I'm checking. That's, in all sense and purposes. I do something in the morning, and I adopted it from, I think her name's Avery Warden. She's one of the owners of a local ski hill. And she dedicates 5 minutes every morning to, a mindset practice, money, marketing. I added meals, like meal planning, prepping for my own self, and movement, because that's important to me, especially getting going in the morning. But the nice thing about the money thing is I see it all right there.
Right.
And that way I can keep track of it. I always, try to stay abreast of what's happening because, I have multiple businesses. Right. So there's always a lot going on. So I try to keep abreast of it, on the simple level of what are my balances today? Mm-hmm. And then on my calendar, I have when certain bills are paid and things like that come out. So I know okay, the Amex bill is coming out today. It's typically around $2,000. Let's see if it's more or less, essentially what's that going to do to my balance, things like that. So I kind of very simplistically kind of keep track of what's going on there. But yeah, that's inherently simpler than making a HELOC payment, which I had to do by hand because I didn't actually have a regular account at that. But you know what I mean?
Yeah. Do you think it gives people more agency over more of their living situation or position? Because traditionally, I feel like that once somebody locks in a long-term, house purchase, and they get accustomed to, they only think about that purchase one time a month, which is when they actually have to pay the bill or pay the make the payment. And other than that, they don't really stop to think about that in their big picture.
Yeah, they don't ever review and see how their finances are actually being affected.
What I'm feeling like or thinking about when you're explaining sort of your, and thank you for sharing that, because I think it's very important that, to people to hear that what you're saying is basically is you wake up in the morning and you assume great personal responsibility over your life. And what
Ideally.
Instead of set it and forget it, like you're
a
actually being able to see things.
There are two kind of people in this world,
Yes.
right? There are those people that just let life happen to them, and those that make life happen. And I think the nice thing about this environment that we're in, again, with the opportunities that are present, is for the right people that understand it and have the the wherewithal to act on it. There's actually tremendous of opportunity, but it requires a certain commitment to a higher level of personal responsibility.
Definitely.
When it comes to money stuff, particularly, and what your wealth position is, and your cash flow, your day-to-day cash flow situation, and so I don't know. I just think that's a critical.
And freedom, part of your podcast.
Yeah.
There is something very reassuring about the fact that I have equity available as liquid cash. I co-own a rental with my dad, and we're always kind of keeping our eyes open for the next opportunity that makes financial sense.
Right.
And same thing with my husband. We've been looking for a trailer for our side-by-side for forever. Are we desperate? No. So, we're just kind of waiting for one to pop up, or a friend selling one, or, there's a deal or whatever, right? We can buy that whenever the time is right? And that hasn't happened yet. So if anyone has a 12-foot by 6-foot trailer for our side-by-side, we're very interested. But same, like when the and I'm not saying
I actually might know someone.
Yay!
Yeah,
I just have to say it. It'll happen. I think being available to make purchases when the opportunity is ripe is so powerful. I mean, I'm not saying I'll do it, right? But I have the option.
Right.
You have the freedom.
Right.
Yes. Mm-hmm.
You have the choice.
And that's it. I mean, the number of times that people are sitting there, equity is doing good if it's just simply locked up, and not that you should go and spend all your equity. You probably aren't going to qualify for the all-in-one loan if that's how you would live.
Yes.
But being able to do it, because ultimately your house is a massive asset, and being able to use it, leverage it to be able to put your money to work better somewhere else is just a brilliant thing.
Yes. And for many homeowners, it is their biggest asset. For many people, it will be their biggest purchase. And for many people, it is their main investment.
Right.
So it's your money,
Yeah. Around that, as far as biggest investment, especially like in your world, what are you seeing as far as people age-wise for who are your most, especially the ones who are feeling stuck in the house but should probably move? How often do you see somebody who should probably be downsizing for their lifestyle, or maybe not downsizing, maybe upsizing so the grandkids can come visit, or getting to move into a condo situation or something like that?
You're talking about the boomer generation?
Yeah, like those kinds of worlds. What would you say demographically, age group wise, are the people who are kind of stuck now?
So I think baby boomers are the ones that aren't necessarily making moves, but they have the most capability to do so and flexibility with how they do it. And they do make up the majority of home buyers right now. Sadly, the average age of a first-time home buyer is now 38.
Isn't that crazy?
The highest it's ever been. And we can all kind of understand why that is. Which is really sad. And now first-time home buyers are less than a quarter. And that was usually more like a third. It was a big demographic that you're always paying attention to. And it's kind of fallen by the wayside. And this is right. That would be like millennials, Gen Z. There's so many young people now that feel like they'll never buy a house. I think that's shocking maybe for some of, the millennials, Gen Xers, boomers, these older generations to hear, like, because that American dream of, you go to college and get a good degree for a job and you stay in that same job or career field for 30 years and you retire with a traditional 401k and et cetera, et cetera. That was all gone after '08, right? Like that's a lost pipe dream. Well, the boomers got to experience that. Many of them, obviously not all of them, but many of them got to sort of experience that, if they worked hard and saved their money or were responsible or whatever and purchased this house and, then retired at age XYZ, that's not the reality for a lot of younger people anymore. But it's, to me, it's sad that people, they're so disenchanted, they just give up before they even consider trying.
Well, and one thing that I've really enjoyed helping people with is kind of understanding, we call it the advanced inheritance strategy. So the boomers have kids who desperately want to buy a house.
Yes.
Even though you can buy a house with very little down or potentially even no down, obviously the more you have down, the lower your loan amount is, and therefore the lower your payment is. So parents want to help out, but they are worried about running out of their own assets as far as, they have their everything planned out with their 401k and their pension, and I can take this much and I'm going to be fine. And
they didn't think they were going to have to do this for
Correct.
their kids,
but
they weren't planning on it.
But they're sitting on that massive asset.
Yes.
And oftentimes it's paid off completely. Now, many of them want to stay in that house for the rest of their lives. That, figuring out how to help them age in place is a big part of, what I do. But if they are already set up there and they don't need that money, their kids are going to inherit the house anyway.
Yeah.
So wouldn't it be lovely to put a reverse mortgage there that you don't own any mortgage payment on? You don't have anything. You can now draw down that money and give those kids their inheritance right now so the kids can have the down payment to go buy the house they want and be in a much more comfortable loan. It's a win-win for everybody. Like, again, their kids are going to get it anyway.
There is a win-win for sure there. And I do see a lot of baby boomers that are trying to be closer to their kids and grandkids. I kind of joked about it, but I had a summer of grandmas. They were sort of my bread and butter clients, and they were all moving here because their daughters or sons lived here and either had children or were planning on having children soon. And they wanted to be available for watching the grandkids, being around for these big life moments. And so I did have a client that wanted a large home for where the whole family could gather. It ended up being too much for her. So she did, we call it right sizing, into a condo that was lower maintenance because they still kept their primary residence. Mm-hmm. And that's the nice thing too, of like, you can keep your primary residence. Right. You don't want to give up your family home and all those memories yet. That's fine. But if you want a condo, townhouse, smaller home, bigger home, closer to where your kids and family are, that maybe can't move because of jobs, schools, what have you, do it.
Well, the number of fun things that I get to work on with people around, again, using that house wealth in a buying market, that can help realtors because of helping another way to come up with money. One of the great ways that I love, the person who does want to buy that second home or say a family vacation place, the lake house or something like that, they can take a reverse on their primary. They can now have the funds to pay cash for whatever it is they're going to buy, that lake house, that condo, closer to the kids, whatever. Now that's owned outright. So especially if it's a family vacation home, now everybody enjoys it. And when that parent does pass, again, inheritance, now the kids get to get the place they all wanted, the cool lake house, free and clear, and the debt gets paid off by the sale of their, so I always find that fascinating. And of course, one of the things that always comes out, but you're giving away your home, that the number of misnomers out there around reverse mortgages are just mind-boggling. You don't lose your home. You still maintain title. It's a mortgage, no different than anything else. You just don't have payments on it until a date that requires that. You die, you sell, something like that.
Yeah, and correct me if I'm wrong, but I think it was all sort of the bad lending practices that happened before the crash, if you will.
And before they did a huge overhaul of how it has to happen. And
Same things, I think, with just lending in general.
Oh, yeah.
I mean, there's not as many adjustable rates. I mean, there are for people who are comfortable with that.
Right.
And that's one way to get kind of creative in today's situation. But, everybody wanted these super safe, very traditional mortgages after what happened with that big old mess. But, I mean, you cannot just sign up and buy a house. Like, those days are long gone. And same with the reverse mortgages. This isn't the telemarketer calling granny
Right.
and, screwing her over
Right.
for, not that would be how any of us ever really did business.
Yeah. Well, I think that that boomer generation, I think that they are probably I don't know this I have no reason to say this other than this is just what my gut tells me. They're probably the ones that have the hardest time with the whole interest rate battle, because like that's the primary driver for them, because that's how they were trained from their
About everything.
their upbringing, their whole lifestyle from basically from World War II until the early 2000s was probably our whole economic system got driven around, from a consumption standpoint, around interest rates.
Yeah.
And it became a shopping game of chasing interest rates. And I'm wondering, I'm curious, do you think that some of these creative financing strategies, going back to the very first question of the conversation about the inventory issue, if applied, would that solve the inventory issue to some extent, or what percentage of the inventory issue would that solve? Or is there truly because the only other thing that contributes to an inventory issue is that the houses just aren't there.
Lack of housing.
Like they actually aren't available. So is the inventory issue really truly driven by this? And if so, does this help really solve it?
It's a huge factor in the inventory issue. There's also I feel like maybe baby boomers are less susceptible to letting things go as far as assets. And instead of sort of revolving wealth to them, it's their house, right? They got to keep their house till they die. That's their, golden ticket.
Sense of permanency.
Yes. So I think 42% of home buyers are baby boomers. Around 40%, almost 40% of homeowners own their home free and clear. So, I mean, you look at that is a lot of equity in baby boomers. I think there's going to be, I forget the number, but it's in the trillions, the transfer of wealth as more baby boomers get older, transfer that wealth, pass on, etc. I think that will trickle down, hopefully, and help some of these other, younger generations. I don't think it's as much of like a handout, if you will. Truly the times have changed. And I think, generational wealth is a privilege, but it is not something to be hoarding, right? Like, what sense is it sitting on your house and having it do nothing when it could be benefiting your family now? My dad is a baby boomer, and he's an accountant and an MBA, very up on, he watches the stocks all day, and he's retired now. You'd never know it, but he's kind of a character. I'll just say that. So he feels that instead of passing on and then having his estate, we'll inherit, me and my brothers or whatever will inherit essentially money from his assets that get sold off or whatever his estate may be. He would much rather participate in real life today investments and transfer not only hopefully potentially wealth, but the knowledge or even sort of the ability to try something, and instead of when he passes on. So there's a book about dying with zero or whatever. So I think he kind of that way.
We should have had Kellyanne on our last conversation with Kyle. We were just having the conversation. The last show we did was around this whole premise of legacy, which is exactly what you're talking about. We were talking about, why legacy is something. Is it the question was, is legacy something you create pre-death, or is legacy just what you have or leave behind?
An
after you
inheritance
die?
is what you leave,
Yeah.
but a legacy is
Legacy.
what you create.
You build.
You
It's
have
what
to
you
build,
do
yeah.
while you're still living and breathing,
Right.
and like what you actually the effort you make, the actions you take, the intentions you have.
Yeah. And the feelings from your kids and grandkids by the legacy you give them versus just the inheritance you leave them.
Yeah.
And if you can use your money now to help them with those kinds of
Yeah.
legacy and memory building.
Which is exactly what sounds like what you're saying. What your
Yeah.
dad's mindset is. That's wonderful.
It's great.
Yeah.
But I don't think that's the only solution for inventory is as these baby boomers age and sell off their houses. A lot of them will need updates. Homes are now smaller on average than they were back then, mostly because of cost, essentially. But I really do think, especially in our areas, I think as that generation continues to sort of die off, for lack of a better term, there will be some transfer of wealth. Hopefully, there will be some inventory coming on the market where we're not tit for tat. You know,
Right.
people in younger generations, they have to sell and they're buying. So like it evens out. It's a wash. This we would have plus inventory in the plus category, but we are decades behind in new construction.
Right.
Decades. And so I used to say, because people asked me this, I got this question a lot when the market was hot. Where is this need for housing coming from? How did we get in a national housing crisis, which is very much real in our area and in Montana, and the affordability crisis? They're essentially enmeshed with each other. But gone are the days where women had to be married. I mean, 50 years ago, thank God. Women couldn't have a mortgage on their own. So now we have, and more first-time home buyers are women than men. So now we have women, single women. Now we have, men. They're not waiting till they get married to buy a house necessarily. And then you have the baby boomers, who many of them have divorced maybe more than once. So instead of one couple owning one home together, that's
The number of single
two people.
Yeah, that's interesting.
There are so many more singles buying homes. So I think that shift needed more housing, and we never caught up with things after 2008.
There is an interesting one there too on kind of more of a multifamily type for, for a very long time, generationally, you had grandma still living with the parents, and everybody wants to now live on their own. But even things like accessory dwelling units.
Yes.
So properties that can get an upgrade in there, especially if they can put it in there and then probably bring it on the market, the value of that is going to go up.
Oh yeah, we are going to see more and more multi-generational living. We are going to see more ADUs, more granny pods. Bozeman changed their zoning to be a lot friendlier for the higher density. Butte is redoing their zoning comprehensively. It's not out yet, but it is going to be friendlier to sort of these ADU type situations. A lot of people blamed Airbnb and investors, foreign investors essentially, or, rich Californians, sorry for the cliche, coming in here and buying all the property. And I mean, Montana's always going to be the dream, I think, for a lot of people. And I think there was an opportunity with what was going on in the world during COVID and the low interest rate environment and the cash that everybody seemed to have.
Right.
That did happen. We are seeing some matriculation from Bozeman. I mean, some people cannot hack it. And that was never intended. Bozeman, Gallatin County was never intended to house that many people.
No.
Their infrastructure wasn't set up.
Right.
I mean, I used to love going to Bozeman. You got to pay me to go to Bozeman these days. Sorry.
Well, we
It's
feel the same
beautiful,
way.
but yeah, big box stores, lots of traffic.
Yeah.
It's lost the appeal, and I 100% get that. But some new construction, some developments, some subdivisions does need to happen
Right.
in our areas. And a lot of it, we talk about boomers, right? A lot of boomers are stuck in their homes with lots of stairs that really need single level living or would really like to age in place, but it's not doable with how their homes are currently set up.
Right.
You know, these split levels from the 80s or tri levels or these big properties that were beautiful and they used to mow the lawn every weekend. But, you know, now shoveling the snow is more difficult. You know, they're more at risk for falls if they're recovering from surgeries and they're not supposed to be doing stairs. Like there are so few single level homes in our area because it didn't used to be as much of a concern.
Right.
You know, people weren't living with all these artificial joints well into their, you know, 80s, 90s and, you know, active and living at home. And now that's a very real potential for a lot of boomers.
It's an interesting one for me when I'll talk to people and they might come to get a reverse to do changes to their house. But when I actually sit and talk to them about what they actually want, it's never even occurred to them that they don't stay in that house. Well, it's paid off. Of course, I'm going to stay in it.
Yes.
And when you actually sit there and start talking about, okay, let's just forget anything. Let's just, perfect world, where do you live right now? Well, gosh, if I could walk to town, you know, if I could get around and do, you know, and be actually close enough that I didn't need to drive an hour to go do my grocery shopping, or if I could this, and I'm like, put out your wish list and then let's see where it might make sense actually to get something out.
Yeah.
And okay, fine. They are harder to find maybe if what they want is a single level, but you have time. You aren't enforced to sell this. So if you are sitting there waiting until you can get on that, you know, that can be a really great, it's always interesting to me. One of the things I find, people don't ever actually think about what they truly want. They're so good at just living, you know, just going through their day to day. And when you actually sit down and have somebody think about what they actually want and how to structure it in a way to do it, you know, Gen Xers are another, which is what we are. It's always funny when they haven't thought about their how their debt's structured or anything like that. They just keep going through. Okay, well, you say you're telling me when you want to retire at 70, but your mortgage isn't going to be paid off to your 80. Maybe we should figure out how to do something different, because it'll be a lot less pressure on what you need. Yeah.
So one of my biggest frustrations with the show is that the hour goes by so fast, and so unfortunately we need to wrap it up. But I want to ask a parting question for you.
Sure.
So what is the one piece of advice that you would like to give people when it comes to everything that we're talking about, whether it's timing the market, you know, the interest rate environment, the trapped equity, the inventory issues? Like what do you think is the one single most critical piece of advice that people need to hear?
I'm glad you asked that, because I feel like there is a lot of noise on social media, and, you know, with the rates and the market and all this stuff. You know, real estate was front and center for a while. And now I think so many people have become discouraged. People don't even want to think about it anymore. And they just get so comfortable with the way things are, even if they're less than ideal.
Right.
So my biggest takeaway with the market, and this hopefully will never change, regardless of what the market is doing, I think you have to do what's best for you, for your life, for your family, for your circumstances, for your wants and needs. Quality of life is priceless, and it just takes sometimes a conversation of maybe asking questions, like you said, really actually thinking about how you want your life to feel, what you want your life to be like. And I'm not saying, you know, we're going to make a dream home happen depending on your current circumstances, but are you doing things today that are going to help you get there in the future? Or are you treading water, right? And I'm not saying that's bad. Sometimes people just need to tread water for a little bit. But my thing is, do what's best for you. If you truly need and really want a bigger home, talk to a realtor, talk to a lender. A realtor is going to tell you to talk to a lender.
So you're saying that people need to be more intentional about having a plan. And
just
and
be open.
part of
Yeah.
that planning involves reaching out, even if they're not currently in a mindset of buying now, they should be engaging in that thought process and that conversation to help them develop their plan.
Absolutely.
Yeah.
The conversation. Get curious.
Yeah.
Be open. Listen to what some of these lenders, realtors, people that have creative solutions, people that have done it, made a big change. You know, it might be more doable than you think. It might be possible sooner than you thought.
It's not
And
true.
it might not.
It's not. You mean it's not true on what they say on social media?
No.
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 What about you, hon? What's your parting advice, tip, comment that you'd like to make?
Yeah, I mean, I always say the number of people are like, I mean, I don't know. I don't want to waste your time. I might be 2 or 3 years out. I'm like, no, there's no such thing as a waste of my time because I always want to be pulling sooner than later. And like, let's just explore numbers. You know, the thing I hate about my industry the most is it looks at eligibility, not suitability. Let's drill into your numbers and your specifics and find out what makes sense for you, whether it be this week, next month, 5 years from now, 10 years from now, you know, whatever that plan happens to be, let's just know. And that's something, you know, trying to get people to review their plans every single year. Like, that's very important to me because what you think now, and we might say this is your 5-year plan, well, when we meet next year, maybe actually now we do need to adjust that a little bit because we all of a sudden had a new kid or, you know, whatever, somebody got, you know, hurt and needs an adjustment to the house or whatever it happens to be. Like, planning is always important.
Yeah.
Now I gotta run back to Montana. I had my